So did you know that stocks can actually have common variations in price between different days of the week? Well, that's what I'm going to look at in this video. It's called Day of the Week Price Variation. I'm going to look at that. I'm also going to look at a Google sheet that I created to actually help us analyze these variations in more detail. And I'm also going to give you an actual sample stock, a penny stock that we're going to look at that has a very strong pattern for this day of the week variation. And basically what I want to do first of all is just recap something I covered in another video very quickly, which is intraday variation. And first of all, for those who are more on the beginner side, the 4 price points in a stock market trading day, remembering that the open is the price when the market actually opens at 9:30 a.m. The close is the price when the market closes at 4 o'clock p.m. The low is the lowest price of that particular day, the lowest price that it hit for that day. And the high is the highest price that it rose for that day, that it rose to for that day. Okay, so it's the highest, the lowest. All right, now I had a simple diagram I put together just to kind of give you an idea of how it could move without looking at actual numbers. You could open here, you could then drop down to a low, for instance, climb up to this high, and then end back off by dropping back down to a closing price. Doesn't have to be in this order. The high could be before the low as well, but this is just an example of how the price can move throughout a day in a very basic way, just looking at the 4 points. And now that brings me to this. With this, what I'm doing is I'm looking at the same thing, differences in prices at different points, but I'm looking at the days of the week. Okay, different points of the week. So I'm looking at Monday's price versus, say, Tuesdays, or Monday versus Wednesday, so on and so forth. So I'm looking at Monday, Tuesday, Wednesday, Thursday, or Friday. And then I'm looking at the open, the close, the low, and the high on those different days, right? So I'm looking at the close on Monday and maybe the high on Tuesday, for instance. Okay. And so here's a simple diagram similar to the other diagram where I'm showing you 2 different days, Monday and then Tuesday, right? One day that follows another. And just imagine that something opened here, dropped to a low, rose to a high, and then closed on Monday. But then on Tuesday, it opened up a bit higher than it closed, dropped to another low, rose to a high that is even higher than the previous day, and then dropped to a close that is even higher than the previous day, right? So here we see these gaps, right? So we see the close on Monday lower than the close on Tuesday. All right, so in terms of making money, if I had bought it here and sold it here, I would make money because the price is higher here than over here. Or even better, if I bought it down here on this low on Monday and then I sold it on this high Tuesday, I would make this would be the most money I could have possibly made, because this is the lowest point on this day and the highest point on that day. Right, so we're looking at buying on one day, selling on another. This is crucial if you are trading and you have day trading limits, which means you cannot always buy and sell on the same day. So instead, you can buy on one day, on a Monday, and then you could sell it Tuesday or sell it Wednesday. All right, so you can buy it on a low on one day, and then you can sell it higher on a different day of the week. And you can do that as many times as you want. There's no limits to that, because that is not a day trade. Okay, now I kind of got the concept out of the way. The Google sheet that I've created is really going to be crucial for this, because as a human being, let's take a look at this stock, for instance, BWV, and I've talked about it in another video. As a human being looking at, say, 1 year of data, I see that this is actually fairly new. It just started on February 18th of 2022. And so it's very new. And as a human being looking at this chart, I can only see what happened overall over the course of a year, but I cannot see inside of each week. Okay, I cannot go in here and see inside of each week to see what's going on and what the pattern is inside of the week. I can't do that. All right. However, a computer has the ability to pull all of this data, which is pulled with Google Finance. And then using formulas, Excel formulas, I'm actually able to look at particular points in the week and compare them. And I'm going to show you how that works, okay? So very simply, starting off from scratch. First of all, get yourself a copy of this Google Sheet. You don't need anything else to run it. All you need is a copy. You get the copy from me, you go to File, Make a Copy. And it's going to run. That's it, okay? File, make a copy, you create your own copy, and you can run it. First thing you do is you type in a symbol, for instance, BWV, okay, which is Blue Water Vaccines. That's the name of the company. Okay, you then put a number of days in the past that you would like to look at. Now, from looking at this 1 year chart, it hasn't even been around for a year. So normally I would put like 360 days, 365. Instead, I'm just going to put like 200 days in the past. That will go back to April 7th, but actually it started February 18th. I'm going to see if I can take it back a bit further than that, maybe 250 days in the past. Okay, and yeah, that should do the trick. So 250 days in the past, and then what that does is it's going to pull all that data for the past 250 days in Google Finance. So you can see from October 21st, which was Friday. Today's the 24th, but starting February 18th, 2022. And it pulls the data for every single day that the market was open. Okay, every single day we have the open, low, high, and close. Okay, now we can see, for one, before I get to the days of the week, that it has a really large range of 20.93%. So this is something that, you know, it goes up a lot in a short amount of time. Okay, and that's what I'm looking for. All right, it's a penny stock, so you can buy full shares of it, and it goes because it's only $1.25. So you can easily, I should say, you can easily buy full shares because it's cheap. But you can see the range, okay? 20.93% is the average range inside of a day, okay? So it can go up very high. It can go up a lot, I should say. It can grow a lot in a short amount of time. However, what I'm doing is I'm comparing different days. Okay, so what I have pre-selected here is Monday's close and Tuesday's close. Now, for the past 250 days, there have been 30 Mondays. That's what this means. So it's going to take Monday, and it's going to compare it to the day after Monday, one day after, which is what this number means, trading days after. And it will compare the day after Monday, which of course is going to be Tuesday most of the time, right? Now, out of those 30 comparisons, it found that it gained 13 times, and 17 times it did not gain from this point, Monday close, to Tuesday's close. Now, I want to talk about what these overall. First of all, the average change means on average, how much did it go up from Monday's close to Tuesday's close? Well, 2.97%. That's the average percent change. How about the gain frequency? Well, how often did it go up? 43.33% of the time. Okay, and over 250 days, that's 43.33% of the time. That's 13 times out of 30. Okay, that's what that is as a percentage. How much did it gain on average? When it did gain, 14.75% on average, which is large. And when it lost, when it went down, in other words, from Monday's close to Tuesday's close, it went down, it was minus 6%. Okay, so that gives us a general idea. Okay, don't worry about that target thing. Now, another thing I can do is I can scroll down and I can actually look at these Monday close-in prices. You see Monday close. So you can see every time that it's a Monday close, it's giving you the price. That's 49.60. Okay, and then it's giving you over here the Tuesday close price, which is the closing price one day after. See, the day after Monday, which was Tuesday, of course, we see 56.62 was the close. Okay, so these were the two prices. And then what it's doing is just bringing those over here for you and then doing the calculation so you can see the growth. So we see that from Monday's closing price to Tuesday's closing price, it changed 14.15% on this particular situation. All right, but this other time it actually went down, and so on and so forth. And you can look at these numbers and it just kind of gives you a general idea. Look how large this drop is. It dropped 17%. That's a huge dive, nosedive. And here it went up very little, only 0.49. Here it dropped 9. All right, pretty significant drop. But check this out. Here it went up 93%. Okay, here it dropped 6. Here it went up 18. So you just kind of get an idea, right? You see some significant drops here, but you also see some large gains between these 2 points. Okay, it just kind of gives us an idea of the behavior, and then it stops because there's no more data after this, right? And this kind of gives you an idea. Now, what you're looking for is what's normal, but here's the thing. Keep in mind, I have only looked at the close compared to the close. And if you look back at this, like this example, you see how these are not that far apart, right? And commonly, they're not typically going to be very far apart, close to close, right? So what I'm going to do is look at some bigger gaps, like the close on this day compared to the high on the next day. So the close on Monday compared to the high on Tuesday. So let's take a look at the close on Monday compared to Tuesday's high. So now I'm going to go to the drop down and select high for Tuesday. So Monday close, Tuesday high. Okay, and now it's going to compare those. And I can even look at this summary. This is also very useful. And it's telling me the most it ever gained between these two. The largest gain was 113.17%. Very large. The largest loss was minus 2.75. That's nothing. The smallest loss it ever had was minus 0.19. That's the smallest, the least it ever lost when it lost. And the smallest amount it ever gained was 0.44. Okay. So this is also interesting because it shows that from Monday's close to Tuesday's high, for the past, really the whole history of this thing since it's been around, that which is still under a year, that it has never lost. This is the most it ever lost. Okay, and we can look at these numbers, and I'm going to get back to this too because I want to point this out, but I just want you to see the difference in these values. Look now at these greens, how much larger these numbers are, and look how small the losses are. All right, so now look at these gains, and of course they are, because you're looking at highs, and highs by definition are the highest point. So of course, when you compare a close to the highs, you're going to get larger gaps, okay, because the high is the highest point of that day. So of course your numbers are going to be larger. You've got 27.72% change here. You've got, these huge percentages, and you've got losses, but they're small. Okay, they're smaller. All right, and most of the time it did not lose, as we can see. And we have some, look, 113 is the max. All right, very large gain. Okay, so imagine having bought this on this day. Let's see what day that was. And it actually tells you right here. It was May 2nd to May 3rd. So imagine May 2nd, just use your imagination. If you had bought it here at 334 at the close price, and then you could have sold it at the high the following day, 113% higher. $7.12 per share. So if you had put in $100, you would have made back your whole $100, right? 113, you would have made your whole $100 back, okay? Plus more, right? 113%. Okay, if you put in 1,000, you would have made your whole 1,000, right? So remember, these percentages are the ROI that you're going to earn. Okay, if you put in 1,000, you would have made a whole 1,000 overnight. So it's very powerful. The potential is very powerful. Okay, looking at these 2 points now mathematically, not just looking at the numbers, but the actual summary of what's happening. On average, it changed 11% from Monday's close to Tuesday's high. The average percent change is 11%, 0.8%. The gain frequency, how often it actually made gains, 83% of the time. Okay, so 83%, that's a lot. That's a large amount of time, considering that we're looking at, over 30 comparisons. I think that's 25 times out of 30. It shows you right here, right? It's 25 gains out of the 30 comparisons. So that's great, right? That's a high, percentage. The average of the gains is 13.56%. The average of the losses is only minus 1.32. So what we like about this is that the magnitude of how much it gains on average is so much larger than the average amount that it loses. Right? So it the behavior is in your favor, right? Between these 2 points. Okay, it's in your favor. All right. So that's great. Okay, so we're looking at from here, Monday's close, to here, Tuesday's high, and we're finding that there's a nice gap. Okay, and this is not just one time, right? This is, has happened repeatedly. Now, another thing we can do, just to be a little more advanced, is you can set up a target amount to say, well, basically what you're asking here is how often did it go up 2% or more, because this is just the minimum, from Monday's close to Tuesday's high. So from Monday's close to Tuesday's high, how often did it go up 2% or more? At least 2%. Okay, well, it happened 22 times. The target, which is 2%, that's what you're trying to hit, it happened 22 times. Okay, out of these 30 comparisons, it happened 22 times. That was 73% of the time. When you calculate it, 22 out of the 30. 73% of the time, Monday's close went up 2% into Tuesday's high. Or more. 2% or more. Remember, it's or more. Okay? So that's pretty good too. Okay, now remember, this is all historical, right? I'm not looking at the future, I'm looking at the past. So the question becomes, well, does this have any bearing on the future? And well, it's kind of a matter of, well, it's a pattern, right? If it's a strong pattern, it's something that just seems to happen, unusually large amount of the time, then it tends to suggest that there's a stronger possibility that it can and will continue to happen. But there are no guarantees. But what you do have is you have this knowledge that you can take, that it has this pattern that you can take over to looking at your chart. So when I look at the week chart, right, I have this knowledge that typically, it goes up a lot on Tuesday. Let's just put it that way. Let's kind of use loose terminology, right? On Tuesday, it goes up a lot in price. So typically, somewhere between Monday and Tuesday, and really what I do, I mean, I've kind of, for the sake of really just explaining the concept this first time, I'm keeping it simple, but actually what's a good idea to do is look at the other days as well and kind of see how, if this pattern continues. If I look at Wednesday, I see the pattern is still there, for instance. So that's typically what you do. And looking at this, I do kind of see already something of you could say a spike. So I hope you found this video useful and you got something out of it. Do keep in mind that as much as something has a pattern to go up, that it also has that same potential to drop. So things that can go up a lot in a short period of time, they can also go down a lot in a short period of time. So do use caution in your approach and how you do this. And then if you want to get a copy of the system, do find a link in the description of this video where you can get a copy of this Google Sheet. All you need to run it is to go to File, Make a Copy, create your own copy. Google Finance is included. It does not require a subscription or an add-on or anything of that nature. So you can immediately begin to use this Google Sheet. And comments, questions, or suggestions, please leave them below or contact me directly. It's Mr. Mark, Spreadsheets for Stocks. Look forward to seeing you in another video.